Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Friday, March 6th. The broader market turned in a modest gain thanks to a late rally effort that overcame steep losses. Initially, stocks were up in a broad-based move that began with buying in the wake of a February jobs report that indicated non-farm payrolls fell 651,000 in line with expectations, and unemployment climbed more than expected to a 25-year high of 8.1%. Stocks were up as much as 2.4% in what resembled past trends that saw stocks sell off leading up to the monthly jobs report, but then rally in its wake as traders bought the bad news. The advance crumbled, though, as sellers re-entered the fold to push financial stocks into the red. Financials were up as much as 4% before falling to a 5.3% loss. Wells Fargo was one of the few financial players to log a gain. The company announced it will cut its quarterly dividend to 5 cents per share from 34 cents per share in order to preserve capital and repay government funds as quickly as possible. Financials closed 1.4% lower. Weakness in financials undercut the broader market, taking the S&P 500 and the Dow past prior session lows to their worst intraday levels since 1996. The S&P 500 was down as much as 2.3%, while the Dow was down as much as 1.9%. The Nasdaq fell to its lowest level in 6 years as large-cap tech stocks buckled. Large-cap tech had actually provided support to the Nasdaq in recent sessions, but the market's downward trend proved too much. The Nasdaq traded with a loss of 2.4% at its session low. Marvell Tech was one of the standouts in the Nasdaq. The company posted better-than-expected earnings and issued upside guidance during its conference call. A late rally effort helped stocks finish off their lows. The effort stalled a bit as sellers redoubled their efforts, but the broader market was still able to overcome. Thanks for listening. I'm Jeffrey Ham.